We have just witnessed something pretty incredible. Coinbase has truly pushed Hyperliquid into another league. That's honestly the best way to put it. I'll explain everything in this video. This is really the major news of the day, and it could bring in a huge amount of money to Hyperliquid. We also talk about strategy because there has been quite a lot of happening around strategy lately. We also cover a hacked protocol. I'll talk to you about Tezos. We'll discuss some good news around Aave. In short, there's a lot to go through. Hello everyone and welcome to CryptoRed, your channel for crypto news. Look, we're going to talk about Hyperliquid directly. It has pumped really nicely over the past 24 hours and climbed as high as $47. It has pulled back a little since then, but look, Coinbase has just taken over USDH, which was supposed to become Hyperliquid's native stablecoin. And in practice, Coinbase is now making USDC the default stablecoin within the Hyperliquid ecosystem. They have taken on a role called treasury deployer inside Hyperliquid. What that means is that Coinbase, well, in a way, manages Hyperliquid USDC treasury flow, balancing liquidity between different platforms, contracts, HyperVM, and so on. And the key point is this. Coinbase has effectively secured the central role for USDC inside Hyperliquid. And why is that such a big deal for Hyperliquid? Because this was done through a framework created by Hyperliquid itself. Under that framework, Coinbase will have to share 90% of the revenue and profits generated by the stablecoin USDC, by the stablecoin activity, 90% of the revenue. That's huge. Think about what that means. We're talking about USDC deployed at scale. There are several $1 billion. There is currently 5 billion USDC in Hyperliquid, with yield somewhere in the range of 3 to 4%. More than 90% of that yield would flow directly back to Hyperliquid. And when I say back to Hyperliquid, what does that mean in practice? It means that this money can be used to buy back HYPE token. The HYPE token will be bought with this buyback, with this money. And yeah, it will generate approximately $150 million or $200 million in additional revenue for Hyperliquid per year. And that is on top of the roughly $600 million of revenue Coinbase, Hyperliquid have actually now. So I don't know if everyone fully realizes how massive this is. With one single deal, Hyperliquid has just added a minimum of roughly 24% more revenue and profits to its already huge profits. This agreement allows Hyperliquid to capture almost all the value created by the USDC on its platform. Now, of course, this is also a bit of an admission of failure for USDH, the native stablecoin of Hyperliquid. They tried to launch it, and they launched it a few months ago. There was a full selection process, and native markets ended up winning the mandate. But personally, I have the feeling that the entire USDH process may ultimately have been a way to get to this exact outcome, putting pressure on the market so that USDC would agree to share the overwhelming majority of its economics with Hyperliquid. Because even though USDH was launched, it never went beyond $100 million in market cap. That is basically negligible compared with USDC on Hyperliquid. It also created liquidity fragmentation. Some markets were quoted in USDH, others in USDC. From a user experience perspective, that was not ideal. Now things become much simpler. USDC remains the dominant stablecoin, the main stablecoin, and liquidity becomes more unified, and Hyperliquid captures the majority of the profit generated by USDC. There is genuinely excellent news for Hyperliquid, and that is exactly why the HYPE token pumped. As I said, it was up more than 15% over 24 hours, significantly outperforming the broader market. And there is more positive news around Hyperliquid. Today, we also saw the launch of the second spot Hyperliquid ETF in the United States, the Bitwise Hyperliquid ETF. So Bitwise is now the second issuer to launch this type of products. They're also offering staking exposure within the ETF structure. So the yield even seems more attractive than the one offered by 21Shares, at least from what I've seen. We are still waiting for Grayscale, and we're still waiting for VanEck ETF. Those products could arrive in the coming days or at most within the next few weeks. So Hyperliquid is now getting stronger. Institutional adoption is really coming, and at the same time, it is deepening its relationship with Coinbase. And going back to Coinbase, there is not a reason why this is being interpreted so positively. For Coinbase to become a treasury deployer, it had to stake 500,000 HYPE tokens. That is a huge amount. At current prices, we're talking about more than $20 million worth of HYPE token. So Coinbase had to acquire HYPE token and stake it. And that shows a real level of commitment to the Hyperliquid ecosystem. And Coinbase is not the only major player involved here. Circle is also part of the setup. Circle has the role of technical deployer, which means they are involved on the infrastructure side, especially around bridging USDC and managing the technical deployment of the stablecoin across the ecosystem. So both of them, and apparently both are supposed to hold 500,000 HYPE tokens. That means Circle and Coinbase are both heavily involved in this deal. And from there, you can start imagining a lot of possibilities. For example, Coinbase could eventually build perpetual markets directly on Hyperliquid. You could also imagine Coinbase wallet integration with Hyperliquid. There are plenty of potential scenarios here, and honestly, this is extremely positive for Hyperliquid. Let's hope the momentum keeps going. There are other things happening around Hyperliquid as well. Don't worry, this is not going to be an entire video dedicated only to Hyperliquid, but there's another very interesting story. First, let's talk about Cerebras. Cerebras is a company that builds chips somewhat comparable to what NVIDIA is doing, except their focus is on inference and making AI responses extremely fast when you send a request to a model. So we're talking about AI infrastructure, and it's a very well-known company in that space. And its technology is being used more and more, and this is the kind of infrastructure that will allow AI systems to answer almost instantly in the future. So they recently completed their IPO. And why I'm bringing this up? Because before the IPO happened, Cerebras was already tradable on Hyperliquid, and the price that emerged on Hyperliquid before the public listing ended up matching the actual price when the stock officially debuted on the stock market. So Hyperliquid is increasingly becoming a place where traders price assets before they officially launch, before the listings, before the IPO, and in order to help the market discover the fairest possible valuation once the asset becomes tradable more broadly. So this is the first time we've seen that happen with such a major stock launch, and I think it will happen again with Anthropic, with OpenAI, and with several other companies that are currently preparing for IPO, for instance, SpaceX. That's why you can really see how ambitious Hyperliquid is. They're trying to capture a huge part of global finance, perpetual contract trading, pre-IPO markets, prediction markets, which are also gradually arriving, and in many other financial use cases, options, for example. So even within the Hyperliquid ecosystem, they use the phrase "the house of all finance." That really sums up the long-term goal, becoming the home of every kind of financial markets. Now, I also saw a piece of news that worried me a little bit. It's not about Hyperliquid. It's concerned the state of the US stock market, which is getting closer to levels seen during the dot-com bubble around 2000. So when you look at valuation, more specifically, when you look at the price to earning ratio, meaning the ratio between the company's profit and stock prices, well, we're currently reaching a very high level of 42, and we're getting close to the historical peak of 44. You can see it on this chart. So the basic idea is that stocks may be starting to look overvalued. And of course, you can already see that in the broader market. The S&P 500 has pushed beyond its previous all-time high, and most major equity markets are performing extremely well. So this is simply a reminder to be careful. Things are happening in the markets and valuations are getting stretched. Personally, it doesn't shock me enormously, but I should also be clear, I'm not a trading specialist. I don't trade the stock market at all. Even in crypto, I'm much more of a long-term investor than an active trader. Still, over the long run, I do think it remains interesting to have exposure to equity markets. I've already said this before, over a very long time horizon, being exposed to S&P 500 or to a broad index like that is generally much less risky than trying to pick individual stocks, trying to buy NVIDIA, Tesla, or other. This is a far more concentrated and therefore riskier approach than owning the market as a whole. So it's somewhat similar in crypto. Being exposed to the crypto market globally is still less risky than choosing one or two smaller tokens and concentrating your entire exposure there. Unless, of course, those two assets are Bitcoin and Ethereum, because with BTC and ETH together, you're already exposed to roughly, 70% of the entire crypto market. Anyway, let's move on and talk about strategy. Look at what Strategy has just announced. They have repurchased $1.5 billion of their own debt. They had previously borrowed money through debt that was due in 2029, and now they've paid back $1.5 billion of it. How did they repay that debt? Well, based on the latest information that came out, it appears this was done at least in part thanks to STRC. STRC recorded a record $1.5 billion in trading volume, coincidentally exactly the same amount as the debt repurchase. So $1.5 billion of debt has now been taken out. What does that mean? It means less leverage for Strategy, fewer constraints on the balance sheet, and more flexibility going forward. They can remain focused on longer dated debt, or an instrument like STRC, where the main obligation is simply paying interest on a monthly basis. And I think that makes the overall situation more comfortable and more manageable for them. But what made the market a little nervous is this sentence in the official announcement. Look at what they say. Strategy expects to fund these purchases, all of the purchases, the $1.5 billion, through the sale of shares, but also through the sale of BTC. Or through the sale of BTC. So they are clearly saying that they may potentially use BTC to fund this operation. And that fits with what Michael Saylor had already said before, when he explained that Strategy could potentially sell BTC in certain situations. And that is absolutely conceivable, for example, to pay interest or to repay debts, or in this case, it would be, to repay debt. And by the way, this repurchase is also interesting for Strategy because they had $1.5 billion in debt outstanding, and they bought it back. They bought it back for $1.38 billion. So they repurchased it at a discount. In the end, they are repaying less than the original amount. They borrowed $1.5 billion, used that money to buy BTC, and now they are only paying back $1.38 billion. So this is clearly very attractive for them. And on top of that, this debt carried 0% interest rates. So yeah, once again, it's a very good financial engineering move from our dear Michael Saylor. So we have talked about the repurchase, the purchase of the debt. We have talked about the trading volumes. And we've talked about Strategy, but there's one other thing I saw circulating on Strategy's official X account. It shows the trades they are currently doing, selling shares to buy BTC, selling STRC to buy BTC, but they also highlighted possible future trades. And among those future trades, we can clearly see sell BTC to buy debt. It is highlighted in green. We can also see sell BTC to buy USD, which simply means selling Bitcoin, and plain and simple. So clearly, this is something they have been preparing the market for some time now. They are gradually normalizing the idea that Strategy could one day sell BTC. The goal is probably that by talking about it repeatedly and by framing it in advance, the market will not be shocked if it eventually happens. That way, it should not trigger a major collapse in Strategy stock price. What is funny as well is that STRC is now starting to appear in DeFi in a fairly integrated way. I found it a little strange to see STRC being used in decentralized finance, but yeah, it is now one of the options available for generating yield. Now let's talk about Tezos. I wanted to talk about Tezos because they are preparing the post-quantum world. They are getting prepared to the post-quantum world. They are actively working. They have already published some early research and updates and testing some stuff. So they have a roadmap that is becoming quite clear. They have deployed some of this development, like I said, on testnet. So Tezos is positioning itself to be ready for the quantum era, and that is an excellent thing. Next, Chainlink. Chainlink continued to gain market share with its bridge infrastructure, the CCIP. More than $2.5 billion in additional TVL is now being secured through Chainlink. And, after the Layer 0 exploit, a lot of projects are migrating from Layer 0 to go to Chainlink. And the latest project to migrate is Kraken, more specifically Kraken's wrapped Bitcoin products. They had a BTC product connected to Layer 0, and now they have said, no, we're going to stop using Layer 0 and move over to Chainlink instead. So yeah, that's clearly another very positive point for Chainlink. And by the way, speaking of that exploit, in the end, the Kelp exploit, in the end, things are ending rather well in one sense, because Kelp has reopened withdrawals. That means people holding RS-ETH can now withdraw at ETH again. Aave has also reopened the affected markets, Everything is back online. People can now withdraw what they had on Aave without any particular issue. So overall, the story of the kelp hack ends quite well. It actually ends very well, fortunately for everyone who had money in the protocol. Those who waited and are now withdrawing can do so without any major problems. So yeah, it's really, really good news. But there is another protocol where things are going much worse right now. I'm talking about Torchain. Torchain's token, Rune, dropped sharply after a hack today. Around $10 million was stolen, and unfortunately, this is not the first time Torchain has faced this kind of issue. They have been hacked many, many times over the years. From the very beginning of the project, they already had serious problems, and unfortunately, those problems have continued to come back. So sadly, the troubles are continuing for this protocol, and that is why I wanted to share with you today on the latest crypto news. I hope you enjoyed the content. Feel free to like the video, leave a comment, and subscribe, and I'll see you very soon for the next one. Take care, bye-bye.